Hello traders. It is 8:01 a.m. Chicago time on Wednesday, the 5th of June 2019. Please let me know if the sound is too high, too low. I'm on a laptop remote today and traveling. I'll be traveling back to Chicago this morning. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, there's no, because I'm on a laptop with limited resources, the broadcast is in 720p, just to cut back on the dropped frames and just poor quality of the video. Again, I don't have a very good connection here. So anyway, today risk on continues from yesterday. Yesterday, big rally. Gold's leading the pack. Gold popped higher, very strong, up $16.40 following the comments by the Fed yesterday. The dollar, of course, taking a hit as well. Gold's trading at $1,345.20. The Nasdaq is the next leading the board, up 42 points or 0.6%. Followed by the Dow, then the S&P. Amazingly, the treasuries are up as well, 10.5 ticks in the 10 years and 9 ticks in the bonds. The yen is also up. Crude oil is the laggard this morning, trading at 52.71, down 77 cents or 1.5%. Okay. So yesterday played out pretty well, too well, kind of blew right through the key areas we were targeting. So yesterday set us up, if you recall, from the Trader Bite, it was clearly a setup for a push higher. Did not dip down as much as I would have liked to have seen, but still pretty strong run up. And the run up was, I hate to say this about the market, but it was somewhat predictable. Because we're playing with probabilities in a 50-50 outcome, the pesky 50-50 outcome basis, the random nature of the market, I never want to sound certain or have a feeling of certainty because generally trouble's around the corner. So you have a risk-on sentiment today. We did get ADP. ADP was released and was way off. If you don't know what ADP is, it's the largest payroll processing company here in the U.S. And it releases the Wednesday before non-farm payrolls at 8:15 Eastern. The expectation for ADP this morning was 180,000, came in at 27,000, a big miss, the lowest since March of 2010. 9 years. And so what the market did is it responded by dropping 11 points in the S&Ps, and that's likely to carry over into Friday's number. Okay, not always, but likely. This morning we get Fed's Bostic. Fed's Evans was just releasing remarks, a non-voting member. Fed's Clarita comes in with Bostic at 9:45 Eastern. We get Market Services PMI at that same time. ISM non-manufacturing at 10 Eastern. And ISM non-manufacturing PMI expecting 55.5. We get Fed's Bowman's testimony at 10 as well. And then we are looking for crude oil inventories at 10:30, expecting a draw of 849,000 barrels. Gasoline inventories expecting a surplus of 630,000 barrels. And then we get Fed's Beige Book at 2 p.m. And then this evening, balance of trade comes out of Australia at 9:30. Okay, so that's what's on deck and what's ahead of us today. Hopefully the broadcast is not choppy and it's nice and clear. I've done a lot to make sure my laptop can keep up. Generally, my laptop chokes. So let's take a look at what was expected yesterday. Here's what was expected yesterday. The primary scenario I was looking for is really the sweet spot for the long is 2760 or so. That was the overnight point of control. It was a big battle area on Monday, and the market really couldn't get down there. So it's unfortunate that we didn't get any response. Remember the 27, 67, 68 area is key. You see it marked here in red as a stock zone. Remember the stock zones is a trademark, by the way. Stock zones are the areas that I anticipate to take action in. I expect to step in a stock zone. I expect the market to respond in some way within a stock zone, and so that's what those are for. And this one is marked red. Stock zones are these not yellow, gray bands that I'm highlighting with yellow circles, and that 68 area is a big one, and of course the 37 area that we talked about on Monday morning is a big one as well. And so what the market has essentially done, if you look at the bigger picture, is it has pushed all the way up to new highs, didn't take out the high, and then it rolled over and it came off 220 points basically to the MC point of control, the biggest and most important area by volume at 27.37. We pushed through to 28.75, which isn't much. Chopped around there on Tuesday or on Monday, and then we came in yesterday with a gap up following Bullard's comments on Monday. The fact that the Fed crack is back. The Fed crack window is back. The drug, and so we came in with a good balance, and the expectation, really, the modest expectation was 27.84 from 27.60, 24 points to the upside. If anything, we're likely to push 27.92. Yesterday pushed to 28.05. Which is another big stock zone area. Okay, so here's what actually happened. There it is. A beautiful open auction in the morning, just sideways open auction. We ended up pushing to the prior day's high by a tick, so there's a teensy weensy little gap here between 63.75 and 27.64, and then we started to see and pay attention to the rotations here. Both sides are staying contained well within the red line. The red line is what I consider to be the statistical impulse rotation value. Those of you who are convergent know this. We've talked about this quite a bit. What forms an impulse and what does it mean? It's staying well within the impulse value, and then we finally get an impulse that breaches the red line, and so now we're looking to the long side. And look, wouldn't you be pleasantly surprised to see it pull back to that mid? So what we have is a push impulse, pull back to mid. Those of you who watched that launch of Trading Futures with Anthony Crudele, I cover this in that video. This is the setup I cover, in that I'm looking for an impulse and a pullback generally to or around the mid, and then we're looking for the first target being the high that was put in. So in that case, that would be 27.80.50 would be the area that you would unload most of your risk. In other words, you scale out. Remember, I recommend in the MES to trade a minimum of a 3 lot. The first lot being a fixed risk scale out, which is close to your stop size. The second being a structured target. In this case, it would be 27.80 and a quarter or so, just ahead of the 27.80.50, and then the third as a runner. So those of you who followed that um, really likely got to 27.84, which was our key target. Of course, it pushed into 27.84, then it squeezed into 89, pulled back to 86, went to 91.75, pulled back to 84.75, which is the MC point of control. So we had a little bit of a rest here at the MC point of control right here. This is the expected action around a point of control, whether it's a prior day point of control, an MC point of control, a composite point of control, it doesn't matter. We generally see the market pushing back and forth in those areas, and then it finally pushes through, pulls back to the naked point of control that was here, and then continues. The thing to take away from this profile yesterday is the nature of it. Look at how blunt these areas are, and then it turns jagged, so we have these high volume nodes that keep getting built. So what we have is push, flag, push, flag, push, flag, push, flag, and that's what forms these high volume nodes, HVNs as I call them, only to finish with the point of control at the high. When we have a trend day up with a point of control at the high, what do we expect the next day? For those of you who have been around for a while, well, I can't wait for your answer because there's a 15-second delay and we can't have 15 seconds of dead air. What we have is a very, very high probability continuation, right, in the Globex session. What this means, what this is telling us with this weak high, with the point of control at the high, is there is so much compressed at the high a day that the only thing that interrupts this is the fact that time ran out, right? Time ran out for the auction. If the auction didn't have time running out because the pit session ended, we would continue higher. When you have a point of control, like a lot of volume at the high a day with a weak high, essentially that tells us that sellers have not been truly found. What would it look like if sellers were found? It would look like it was pushing up, and then all of a sudden we get an impulse the other way or a push the other way, and the profile would be very, very skinny at the top with very little volume as it approaches that high. If sellers come in, there's selling interest coming in, it would be very strong, and then you would have a reversal. And what we have here is the opposite of that. We have the market pushing and kind of holding up here. Well, if we're holding up here, we're not really finding aggressive sellers. We're finding those who are covering, the volumes coming from somewhere. So sellers are in there. But what we have here is a market that ran out of time with the point of control being near highs. Remember, the point of control represents the amount of energy. Volume is the energy behind that price. Then it's likely to continue higher. So we expect in this situation, when we have the point of control near highs, especially with the weak high, what we expect is a market to pop higher almost immediately on the reopen. So that's where we ended up yesterday. Note that the market, other than down here, this almost perfect 50% tag or mid tag, we did not retest the IB high. We did not retest VWAP or the mid for the rest of the session. It's a runaway. This is a classical trend day up, and with a point of control that's revealing that it's pretty wound up at the top. So let's take a look at the overnight. Where's my overnight chart? Let me go find it. So here's our overnight. What do we do once we open back up? This is the actual reopen here. We immediately pop higher, and that's that volume at the top that is all pent up getting released into the reopen. This is very, very normal auction behavior. Generally, it doesn't matter what the product is. This is the likely action. As soon as we get that volume bursting, as soon as we get that volume bursting, what happens? We start to pull back and go sideways through most of the Asian session. Pretty good range still, somewhere around 8 or 9 points. But overall, not much to price in. The market's in standby mode, very little volume. You see the volume there is just completely flat, and volume starts to pick up around the European Open, which is what we traditionally see. The Europeans come in and they immediately take it back up, and then the ADP caused us to have a bit of a pullback here. Which we're taking back right now. So right now the over underline is somewhere around 28.17, which is where we are currently. There's this area, you could see that it acted as resistance initially, right here, support and potential resistance here, and I'm watching that line very careful. And of course, that's the area of the key low volume node of the session. What does that mean? It is the dip from next to the point of control for the session. The first dip next to the point of control of the session is the neckline, or the key low volume node. So all of those are likely to come together to give us a pretty good clue as to whether or not we're going to push higher or lower, and we'll find out on the reopen. Okay, so that's where we stand. That's how we left things. The volume yesterday was 1.43 million contracts, which is pretty good. It's basically in line. The most recent volume is about 1.21 million, is what we would consider to be common or normal, and yesterday's range, given that we closed from close to close, the 2750 and a quarter to 2805.75. We closed 55.5 points higher. The last time we have closed at that magnitude was even higher, which was January 4th, over 80 points from close to close. And on the following day, we closed 20 points higher from there. And already we're in a gap zone, so it's not quite correlated, but overall, a pretty strong up day. And we haven't seen that in about 5 months from yesterday, exactly 5 months from yesterday. And so in general, when we have that kind of strength, the following day, if you go back in time and look at everything that's close to close above 50 points, you'll find that we tended to move higher the following day, put in a higher high, higher point of control, higher low on the day. Unless news comes in, I do not expect 2764 from yesterday to be taken out. So that's where we stand. That's the review segment. Let's take a look at what we're expecting for today, so you all can go on your merry way. Let me just prep the chart here. Here it is. All right, so we're trading at 28.18 right now. We're trading at 28.18. The overnight inventory is long. The expectation, the overnight. Oh, one thing I didn't go over. Hang on. Real quick. 1 second. The volume overnight is pretty strong. 386,000. It's pretty good to it's pretty good volume so far. So we're getting pretty good participation, and what the way we can use that information is that we're likely to continue to have pretty good volume. Oh shoot, the other thing I wanted to cover with you this morning in the review segment, let's take a step back for a minute to review, is the delta. Look at this. Look at these delta lines This is the delta, the volume delta, for those of you who don't know, is a way of tracking buying volume versus buying aggressor volume versus sell aggressor volume. Like how the delta measures how aggressive, how much volume across the bid ask line to buy minus how much volume sold across the bid ask line. These are considered aggressors. As you can see, the participation in the yellow, is the very large lots. These are 100 lots or bigger that are consolidated. These are orders that are consolidated by the software back into 100 lots and bigger. And you could see that there was quite a bit of aggression on that big rotation that launched us off. And then the large lots kind of backed off, but on the close, wow, that is some, the overall delta, the net delta, was really governed by very large lots, and this speaks of really big size coming in here and meaningfully lifting the market. So to me, it's a relatively strong indication that that there's likely to be follow through. This morning, the expectation is for an open auction. We are inside of this big selling day on the 28th. This is the day after Memorial Day. We had a decent selling day that day. We are pushing into that. Guess what coincides with the overnight high? This is one of those things with the market. It's like art, and then seeing life imitate art type of thing, where the 2475 high is the key area, which is marked by the stock zone, is the key area, the key test area from that Tuesday. So this is your template day. The Tuesday, you really ought to look at this day and really play back that day if possible. We're running out of time now to see what happened that day, because that's what's likely to govern today's trade. The market has memory. 24.5 was the pullback area before we pushed up to this beautiful mid trade before the explosion downwards. Just a beautiful day overall. And 24.5 was the initial bounce area, and that happens to be our overnight high. Okay, really important to see that symmetry or that that memory that the market has. My expectation this morning. Okay, now you're gone. See ya. Sorry, I had to clean this idiot up. The expectation is for the market to take it easy this morning. I'm expecting it to respond back into 2012 and potentially yesterday's high, but I am expecting an impulse up, and I'm looking for it to push through this 24.75 into 28 and to extend out into the 28.33 area. It's quite amazing. 2 days later, we're 100 points higher. But that's what I'm looking for on scenario one. Follow the trend rather than coming in assuming that, oh, it's already gone too far, hey, let's sell it. That's not how to make money, in my opinion. The secondary is a response back that pushes to the overnight high to 24.75 that ends up pushing to the middle and then coming back into and towards this 2800, 2797 area. Oh man, this looks like an algo here, just spamming. Sorry, hang on. I need an administrator. I'm reporting this guy's ass right now. Anyway, so I'm expecting a reversion back, and it's natural for this to happen in that we get the higher high, we get the higher low, but the point of control then is likely to stay higher, but we end up finishing lower. This is okay after a big run like yesterday, and that's what's expected for scenario 2. Anyway, I've gone way over my time because of the type of action that we got yesterday. Hopefully, you've gained something this morning. Watch your risk, take your time, take a minute and let the market set up before you jump in. Good luck.